Hey there, future insurance gurus. Have you ever stopped to think about how unpredictable life can be? One minute you're scaling a mountain, the next you're nursing a sprained ankle. That's where accident and sickness insurance swoops in to save the day. This vital coverage provides a safety net, offering financial protection when unexpected health issues arise. Imagine this. A sudden illness leaves you unable to work. Without accident and sickness insurance, you're not only facing mounting medical bills, but also a loss of income. This type of insurance helps cover those costs, giving you peace of mind during challenging times. But here's the catch. To provide this invaluable service, you need to be licensed. That's where the accident and sickness insurance exam comes in. Passing this exam equips you with the knowledge and credentials to guide individuals and families towards the right coverage. So, whether you're passionate about helping others or seeking a rewarding career path, this exam is your gateway to a world of opportunity in the insurance industry. Now let's talk about conquering that accident and sickness insurance exam. We know it can seem daunting, but trust us, it's totally doable with the right preparation. That's what this video and your dedicated study efforts are all about. We'll break down complex insurance concepts into bite-sized, easy-to-understand pieces. Think of it like building a house. We'll start with the foundation, basic insurance principles. Then add the walls, types of risks and losses. And finally the roof, risk management techniques. We'll also sprinkle in real-life examples to make these concepts relatable and stick in your memory. Because let's be honest, who wants to wade through pages of dry definition? We're all about making learning engaging and effective. So grab your notebooks, get comfy, and let's embark on this journey to exam success together. Before we dive into the nitty-gritty of the accident and sickness insurance exam, let's take a step back and understand the broader landscape of insurance. Think of insurance as a safety net that protects you from the financial impact of unexpected events. Just like you wouldn't climb a mountain without a harness, you shouldn't navigate life without some form of insurance. It provides peace of mind, knowing you're covered if something unexpected happens. Now, insurance comes in many flavors, from car insurance to homeowners insurance to, you guessed it, accident and sickness insurance. Each type of insurance addresses specific risks and provides financial protection in different situations. In this video, we'll zero in on accident and sickness insurance, exploring its intricacies and equipping you with the knowledge to ace your exam and thrive in this vital field. So buckle up and let's get started. Before we dive into the specifics of accident and sickness insurance, let's take a moment to understand the fundamental concept of insurance. Imagine this. You're holding a delicate vase and there's always a chance you might drop it. Insurance is like a safety net you place under that vase. It won't prevent you from dropping it, but it will cushion the impact if you do. In essence, insurance is a contract between you, the policyholder, and an insurance company, the insurer. You pay the insurer a regular fee called a premium, and in return they agree to pay you a certain amount of money if a specific event covered by your policy occurs. These events can range from a car accident to a house fire to, in the case of accident and sickness insurance, an unexpected illness or injury. Insurance helps protect you from the financial burden of these unforeseen events, providing a safety net for you and your loved ones. Insurance expert. Now, insurance isn't about eliminating risk altogether. That's impossible. Instead, it's about transferring that risk from you to the insurer. They have the financial resources to handle large claims, while you gain peace of mind knowing you're covered if the unexpected occurs. So, the next time you think about insurance, remember that safety net. It's there to catch you when life throws you a curveball. Section 2, risk, the heart of the matter. All right, let's talk about risk, the driving force behind insurance.
In the simplest terms, risk is the possibility of something bad happening. It's the uncertainty we face every day, from slipping on a wet floor to being involved in a car accident.
Now, there are two main types of risk: pure risk and speculative risk. Pure risk involves the chance of loss only with no possibility of gain. Think of a house fire. You could lose your home, but you can't really win in that situation.
On the other hand, Speculative risk involves the possibility of both loss and gain. Imagine investing in the stock market. You could make a profit, or you could lose your investment.
Here's the crucial part. Insurance only deals with pure risk. Why? Because insurance is about providing financial protection against unforeseen losses, not about gambling on potential gains. It's like wearing a helmet while biking. It protects you from head injuries, but it doesn't guarantee you'll win a race.
So, when we talk about accident and sickness insurance, we're focusing on pure risks, the chance of unexpected illness, injury, or even death. These are events that can have significant financial consequences, and insurance is designed to mitigate those risks.
Section 3, loss, the flip side of risk. We've covered risk, the possibility of something bad happening. Now let's talk about its counterpart, loss. Loss is the actual reduction in value that occurs when a risk becomes a reality. It's the financial consequence of that unexpected event. Imagine you're driving home and get into a car accident. The risk was always there, the possibility of a collision. The loss, in this case, would be the damage to your car, potential medical expenses, and maybe even lost wages if you're unable to work. In the context of accident and sickness insurance, losses typically stem from hospital bills, doctor's visits, surgeries, medications. These costs can quickly add up after an illness or injury. If an accident or sickness leaves you unable to work, you lose income. Disability insurance helps replace a portion of that lost income. Life insurance provides a payout to your beneficiaries if you pass away, helping them cover funeral expenses, debts, and living expenses. Understanding loss is crucial because it's what insurance aims to address. By pooling the resources of many policyholders, insurance companies can pay out claims when losses occur, providing financial protection and peace of mind. Section 4, risk management, taking charge of uncertainty. We've talked about risk and loss, but how do we deal with them in our daily lives? That's where risk management comes in. It's the process of identifying, assessing, and controlling potential risks. Think of it as having a plan for when life throws you a curveball. There are 5 basic strategies for managing risk. 1. This involves completely avoiding activities that carry a specific risk. For instance, if you're terrified of heights, you might choose not to go skydiving. This involves taking steps to lower the likelihood or severity of a loss. Wearing a seatbelt while driving is a classic example. It won't prevent an accident, but it can significantly reduce the severity of injuries. 1. This means accepting the risk and its potential financial consequences. Choosing a high deductible on your car insurance is a form of risk retention. You're prepared to pay for minor repairs yourself while the insurance kicks in for major accidents. 1. This involves spreading the risk among a group of people or organizations. A partnership is a good example. The partners share the profits, but also the losses if the business fails. 1. This is the essence of insurance. You transfer the financial risk of a loss to the insurance company by paying a premium. They, in turn, agree to cover the costs if a covered event occurs. Section 5. The law of large numbers insurance's secret sauce. So, how do insurance companies determine how much to charge for premiums and still stay in business?
The answer lies in a fascinating mathematical principle called the law of large numbers. In simple terms, this law states that as the number of similar independent events increases, the actual results will get closer and closer to the predicted results.
Think of flipping a coin. If you flip it only a few times, you might get heads most of the time. But if you flip it thousands of times, the results will eventually even out to roughly 50% heads and 50% tails.
Insurance companies use the law of large numbers to predict future losses. They collect vast amounts of data on past events, such as car accidents, house fires, and illnesses. By analyzing this data, they can estimate the probability of these events occurring within a given population.
This allows them to calculate premiums that, when pooled together from a large number of policyholders, will be sufficient to cover the costs of claims. Essentially, they're spreading the risk across a large group, making it financially manageable.
The law of large numbers is the backbone of the insurance industry, enabling it to provide financial protection and peace of mind to millions of people.
Section 1, pure risk versus speculative risk, navigating the insurance landscape. Let's delve deeper into the concept of risk and explore the two main categories that are crucial for understanding insurance: pure risk and speculative risk.
Remember, insurance is all about providing financial protection against the possibility of loss. Pure risk is like walking a tightrope without a net. There's the chance of a fall, but no possibility of landing safely on the other side. It's the uncertainty of events that can only result in a negative outcome. Think of a house fire, a car accident, or a sudden illness.
Speculative risk, on the other hand, is like playing a game of poker. There's the potential for both winning and losing. It's the uncertainty of events that could swing either way. Investing in the stock market, starting a business, or even gambling are all examples of speculative risk.
Here's the key takeaway. Insurance only deals with pure risk. Why? Because insurance is about providing financial protection against unforeseen losses, not about gambling on potential gains. It's like wearing a life jacket while sailing. It's designed to keep you afloat if the boat capsizes, not to help you win a race.
So when we talk about accident and sickness insurance, we're squarely in the realm of pure risk, the chance of unexpected illness, injury, or even death. These are events that can have significant financial consequences, and insurance is designed to mitigate those risks, providing a safety net for you and your loved ones. Direct loss versus indirect loss, understanding the domino effect. Let's explore direct and indirect losses from pure risk. Direct loss is the immediate harm caused by a covered peril, like a fire damaging your house or a car accident. Indirect loss is the secondary financial impact. For example, extra expenses for temporary housing after a fire. Understanding these distinctions is crucial for insurance coverage. Section 3. Exposure units. Measuring the magnitude of risk. Insurance companies measure risk using exposure units to determine your premium. Exposure units are like measuring sticks for risk. The greater your exposure, the higher your potential for loss. For auto insurance, they consider your driving record, car type, mileage, and age. For health insurance, factors include age, health history, lifestyle, and occupation. They analyze data to identify patterns and assign exposure units to risk factors. More exposure units mean a higher premium. Section 4. Real-life examples, putting it all together.
Scenario 1. The sprained ankle. Imagine you're a rock climbing enthusiast who sprains your ankle. Direct loss, medical expenses, indirect loss, lost wages, and household help. Scenario 2. The burning restaurant. Direct loss, repair costs. Indirect loss, lost revenue and reputational damage. These examples highlight how pure risk can lead to both direct and indirect losses, creating a domino effect of financial consequences.
Section 1. Risk avoidance, steering clear of danger.
Imagine you have a fear of heights. Would you sign up for skydiving? Probably not. That's risk avoidance.
Here are some everyday examples. Not smoking, driving defensively, and avoiding dangerous neighborhoods. Risk avoidance is like choosing the scenic route. It might take longer, but you're less likely to encounter hazards. Section 2. Risk reduction, minimizing the impact.
Think of it as putting on a helmet before riding a bike. You're not avoiding the activity, but you are taking a precaution.
Examples include wearing seat belts, installing smoke detectors, and getting regular health checkups. Risk reduction is like adding shock absorbers to your car. It won't prevent bumps, but it will make the ride smoother. Section 3. Risk retention, shouldering the burden.
Think of it as choosing a high deductible on your car insurance. You're prepared to cover minor repairs yourself.
Common scenarios include minor property damage, routine medical expenses, and low-value possessions. Risk retention is like carrying a spare tire. You hope you never have to use it, but it's good to have on hand. Section 4. Risk sharing and transfer, spreading the net.
Risk sharing. Imagine pooling money with friends to buy lottery tickets. Risk transfer. Buying car insurance to shift financial risk to the insurer.
Key takeaways. Insurance is the most common form of risk transfer, providing peace of mind. Risk sharing and transfer are like having a safety net. They cushion the impact and help you get back on your feet. Section 1. Commercial insurance companies, the cornerstones of coverage.
Think of them as the supermarkets of insurance, offering a vast array of coverage options.
Within commercial insurance, there are stock companies and mutual companies, each with unique ownership structures. Understanding these distinctions is crucial for grasping the nuances of the insurance industry. Section 2. Delving deeper, stock versus mutual companies.
Stock companies, owned by stockholders, aiming to generate profits. Mutual companies, owned by policyholders, focusing on affordable coverage.
Stock companies operate like owning shares in a corporation. Mutual companies are like joining a cooperative. Mutual companies embody shared risk and reward, fostering a sense of community among policyholders. Section 3. Beyond the big players, exploring other private insurers.
Think of them as the specialty boutiques of insurance, offering tailored solutions for unique situations.
Key players include managed care service providers, fraternal benefit societies, and surplus lines insurers. This diverse array ensures that even the most unique risks can find coverage, fostering a competitive insurance market. Section 4. Admitted versus non-admitted insurers, navigating the regulatory landscape.
Admitted insurers have a certificate of authority, meeting state standards. Non-admitted insurers operate without a certificate but provide coverage through surplus lines brokers.
Admitted insurers offer a stamp of approval, assuring financial soundness. Non-admitted insurers cater to unique or high-risk situations. Think of it as the market for unusual or hard-to-place risks, where non-admitted insurers provide specialized coverage options. Section 5. Government insurance programs, a safety net for all. While private insurers play a vital role in providing coverage for a wide range of risks, government insurance programs step in to provide a safety net for individuals and businesses facing specific needs or circumstances that might fall outside the scope of traditional insurance markets. Think of these programs as the social safety net of insurance. They're designed to ensure access to essential coverage for everyone, regardless of their health, financial situation, or risk profile. Let's explore some of the most prominent government insurance programs. Medicare, a federal health insurance program primarily for individuals aged 65 and older, as well as younger individuals with certain disabilities. It provides coverage for hospital stays, doctor's visits, prescription drugs, and other medical services, ensuring access to health care for millions of seniors and disabled Americans. Medicaid, a joint federal and state program that provides health insurance coverage to low-income individuals and families, including children, pregnant women, seniors, and people with disabilities. It helps cover medical costs, long-term care expenses, and other essential healthcare services, ensuring that vulnerable populations have access to quality care. Real-life examples of risk and loss in accident and sickness insurance. Let's dive into the real world and see how risk and loss play out in accident and sickness insurance. Scenario 1, the unexpected fall. Sarah, a young professional, trips on ice and fractures her wrist. The loss of medical expenses, lost wages, and emotional toll. Scenario 2, the sudden illness. Mark, a father, is diagnosed with a serious illness requiring extensive treatment. The lost medical expenses, lost income, and emotional strain. These examples highlight the importance of having adequate accident and sickness insurance coverage. Section 2. Risk management in action real-world scenarios. Let's see how risk management strategies translate into real-world scenarios. Understanding these applications helps you make informed decisions. Meet Emily, an avid cyclist who prioritizes safety. She wears a helmet, bright clothing, and bikes defensively. Emily reduces risks by being proactive. Meet the Thompsons, dedicated to a healthy lifestyle. They exercise, eat balanced diets, and get routine checkups. They educate their children about healthy habits. These examples show how risk reduction can be part of everyday life. Small steps can make a big difference in fostering a healthier, safer future. Understanding insurance providers through real-life examples. Meet David, a savvy shopper looking for the best car insurance deal. He's drawn to competitive rates from a stock insurance company. Now meet Maria, who values community and personalized service. She prefers a local mutual insurance company. These examples show diverse consumer preferences in the insurance market. Section 4. Navigating the exam with confidence, applying your knowledge. Congratulations on making it to the final section. Now it's time to shift gears and focus on applying what you've learned to navigate the exam with confidence.
Tip 1. Practice makes perfect. Practice tests familiarize you with the exam format and build your test-taking stamina. Tip 2. Read carefully and analyze. Take your time. Read each question carefully and analyze all the answer choices. Tip 3. Manage your time wisely. Pace yourself and allocate sufficient time for each section. Tip 4. Stay calm and focused. Take deep breaths, stay hydrated, and trust in your preparation.
Combine your knowledge with these strategies to ace your exam. Good luck, and remember, we're cheering you on. Section 1. The power of knowledge, your key to success. Congratulations on reaching the summit of this accident and sickness insurance knowledge expedition. We've trekked through the intricacies of risk, loss, and risk management, explored the diverse landscape of insurance providers, and armed you with real-life examples to solidify your understanding. Remember that old saying, knowledge is power? Nowhere is that truer than in the world of insurance. The more you understand about the principles, products, and players in this field, the better equipped you'll be to ace your exam, launch a successful career, and guide individuals and families toward financial security. Let's think back to where we started, with the unpredictable nature of life and the importance of having a safety net when unexpected events occur, accident and sickness. Insurance is that safety net, providing financial protection when illness or injury strikes. By mastering the concepts covered in this video and your dedicated study materials, you're not just memorizing facts, you're gaining the power to make a real difference in people's lives. You'll be able to assess their unique needs, recommend appropriate coverage options, and help them navigate the often complex world of insurance with confidence and clarity. Section 2. Embrace the journey your future awaits. As you gear up for your exam, remember that learning is a journey, not a destination. Embrace the process, stay curious, and don't be afraid to ask questions. The more you engage with the material, the more confident you'll become.
Take advantage of all the resources at your disposal. Practice tests, study guides, and even reaching out to experienced insurance professionals for insights. The insurance community is vast and welcoming, and there's a wealth of knowledge and support available to those who seek it. As you embark on this exciting career path, remember that the insurance industry is constantly evolving. New products and technologies are emerging all the time, and staying abreast of these developments will be key to your long-term success. So, embrace the challenges, celebrate the victories, and never stop learning. Your future in the world of accident and sickness insurance is bright, and we're excited to see the positive impact you'll make.